Welcome to the session of Cost and Works Accounting. In today's session, we are going to study standard costing. I, Dr. S.R. Pagare from K.J.Somaiya College of Arts, Commerce and Science, Kopargaon. Welcome you to this session of Cost and Works Accounting. So let's study standard costing. Before studying standard costing, we need to know what are standards. The word standard simply means some norm, specification or target. It gives a reference point, benchmark, model or yardstick for comparison. Standard costs are part of cost accounting system, whereby standard cost is incorporated directly and formally into the manufacturing accounts. Standard cost is divided into two major parts. One, historical cost, and second, predetermined cost. Historical cost means the actual cost as past cost, and historical costing is a system in which actual costs incurred in the past are determined. Historical costs have some limitations. Such costs are obtained too late and cannot be used for price quotations. Historical costs do not serve the object of cost control, for the cost has already been incurred before cost records are available for management control, and the historical costs do not provide any benchmark against which efficiency can be measured. Let's see what is the meaning of standard costing. Standard costing is a technique which uses standard for costs and revenues for the purpose of control through variance analysis. Here standards are performance expectations. Standard costing aims at eliminating waste and increasing efficiency in operation through setting up standards for production cost and production performance. In short, standard costing is a control device and not a separate method of product costing. Standard costing requires historical costing for a comparative analysis which helps set the goals of standard cost. Standard costing is one of the most important tools to control cost. In this method, all costs are predetermined. Such predetermined costs are then compared with the actual cost, and the difference between them is known as variances. The word standard means a norm or a criterion. Standard cost is thus a criterion cost which may be used as a yardstick to measure the efficiency with which actual cost has been incurred. There is a constant process of development affected in business through the help of standard costing method, since the standard costs set in are sensible, capable of being attained, and are revised from time to time in accord with needs and requirements of the business enterprise. Standard cost. Standard cost is a figure which represents an amount that can be taken as a typical of the cost of an article or other cost factor. It is established on the basis of planned operations, planned cost efficiency, plan, and expected capacity utilization. Standard cost is a predetermined calculation of the presumed cost under the specified conditions. It is built up from an assessment of the value of cost elements, that is material, labor, and expenses. It correlates technical specification of material, labor and other costs to the price or wage rate which have occurred during the period in which the standard cost is to be determined. Let's see the definition of standard costing. CIMA London defines standard cost as a predetermined cost which is calculated from management standard of efficient operation and relevant necessary expenditure. Brown and Howard have defined standard costing as the standard cost is a predetermined cost which determines what each product or service should cost under given circumstances. Let's see the features of standard cost. First, standard cost is a predetermined cost. Second, it is based on past experience. Third, it is used for measuring the efficiency of future production. Fourth, it may be expressed in terms of money or quantity. And fifth, standard costing may be applied to any industry. Types of standards. There are two types of standards. First is basic standard and second is current standard. Let's see basic standard. The basic standard is determined for an indefinite period. It remains unchanged for a longer period. It is established and operated for a number of years. Variance from basic standard show trend of deviations of the actual cost. This type of standard is not useful for controlling cost. It is suitable for those items which are fixed in nature, such as rent, staff salaries, etc. Current standard. This type of standard remains in operation for a limited period. It is related to current conditions and is revised at regular intervals. There are three types of current standards: ideal standard, expected standard, and normal standard. Ideal standard. This is a theoretical standard which is difficult to attain. It presupposes the fact that performance of man, material and machine is perfect. It does not make any allowance for loss of time, accident, machine breakdown, wastage of material, etc. This ideal standard is unrealistic. Second, expected standard. This standard is anticipated to be attained during a stipulated period. It is based on expected performance. It makes a reasonable allowance for unavoidable losses. Hence, while setting the standard, the known causes of inefficiency such as idle time, machine breakdown, etc. are anticipated. Expected standard is therefore more meaningful and realistic. It is useful for controlling the cost. Normal standard. This standard is also known as past performance standard, as it is based on average performance in the past. The basic purpose of this standard is to eliminate the variations in cost which arise due to trade cycle. It is used for planning and decision making. It is difficult to apply in practice. Let's see the objectives of standard costing. First, to institute a control mechanism on all the elements of cost that affect production and sales. Second, to measure different operational efficiencies and check the wastages. Third, to improve the delegation of authority and generate a sense of responsibility among the employees. Fourth, to develop a cost consciousness in the employees. Fifth, to presume the production cost, sales and profit. Sixth, to avail the benefits of management by exception. And seventh, to bring about a vivid progressive vision and sagacious decision making at each managerial level. Now let's see setting of standards. A standard committee is appointed to set the standards. There should be close cooperation and coordination among the various departments and managers. The standard committee generally consists of managers from production, purchase, personnel, sales, production engineer, cost accountant, marketing manager, etc. Cost accountant plays a very important role in framing the standards. He has to supply necessary cost data and ensure that the standards set are as accurate as possible. Standards should be set for each element of cost separately. The process of setting standard is a valuable activity in itself. The success of standard costing system depends on the reliability, accuracy, and acceptance of the standards. If standards have been properly set and maintained, they are a sound basis for determining cost for various purposes. While setting the standards, the following points should be taken into consideration: duration of use of standard, reasonable standard of performance, and level of activity. Standard set includes the following items: direct material cost, direct wage cost, direct expense, factory variable overhead cost, selling and distribution variable cost, selling price, and sales margin. Now let's see standards for material. It includes determination of standard quantity of material required and determination of standard price per unit of material. For material quantities, after establishing the standard quality of material, it is more important and necessary to establish the standard regarding quantity of each material. Generally, quantities are expressed in terms of kilogram, feet, units, and so forth. Standards for labor. This standard is determined with regard to the current rate of pay and any anticipated variations. It should be fixed for each grade of labor and for each operation involved. The standard hours are fixed for all categories of labor, that is for skilled and unskilled labor. In these standards, number of hours and workers are established. Material prices. This is a forecast of the average prices of material during the future period. This standard is quite difficult to establish because prices are regulated more by the external factors than by the company management. While setting standard prices, the past experiences, existing prices and anticipations should closely examine. Price of material in the past, current prices and fluctuating trends are the base for determining standard of price. Setting for overheads. Setting standard for overheads is more complex than the development of material and labor standards. It is estimated for variable overheads and fixed overheads. Variable overheads. It may be recalled that variable overhead has been defined as a cost which tends to vary directly with the volume of output. It is assumed that the overhead rate per unit is invariable irrespective of the quantity produced, so it is necessary to calculate only a standard cost per unit or per hour. Fixed overheads. Fixed overheads tend to be unaffected by variations in the volume of output. Therefore, it is required to determine total fixed overhead for the period and budgeted production in units. Standard hour. Production is usually articulated in physical units such as tons, pounds, gallons, numbers, kilogram, liters, etc. When a company is manufacturing different types of products, it is almost impossible to increase the production, which cannot be expressed in the same unit. Standard hour means hypothetical hour, which represents the amount of work that should be performed in 1 hour under standard conditions. So in today's session, we have learned the basic things regarding standard costing. In next session, we shall see the objectives, advantages and limitations of standard costing. Till then, thank you.